Hey, Russell, a lot of people ask me, hey, I've got a primary residence and can I buy another primary residence with my investment properties? Is that even possible?
With a 1031. Yeah, so a 1031, if you want to sell a property and defer the tax using section 1031, the property's your intent must be to hold for business or investment purposes, not personal use. Personal use doesn't qualify 1031. I mean, most people don't have to pay tax anyway on a primary residence because you've got that, it's called section 121 of the Internal Revenue Code, right? The 250,000 if you're single, $500,000 if you're married of capital gain, you get to exclude. So you get that. But in a 1031, the only way you can use a 1031 to buy a primary residence is at first you have to buy it as an investment property. And then you have to go through what we call this conversion process. The IRS actually gave its blessing in 2008. They created my favorite revenue procedure. It's Revenue Procedure 2008-16. It is a safe harbor that says, hey, here's exactly how you can use a 1031 to buy something you eventually want to use as a primary residence. It's my favorite revenue procedure. I read it every night before I go to bed. It gives me very happy dreams. But here's the way it works. Sell your investment properties that you would have been killed in taxes on. You don't have to pay any taxes. You can take all that cash, buy your very expensive dream home up on the golf course or the lake or in Tahoe. For the first 2 years, and this is the time period, for the first 2 years, you have to treat the property two ways. One is you have to limit your personal use to 2 weeks a year or less, or 10% of the rental history, whichever is a greater number. So if you rented it on Airbnb for 300 days a year, you could use it personally for 30 days a year. And by the way, if you're going there to work on the property, hey, that's not a personal use visit, that's a maintenance visit. So there are ways legally within the code to use it for more than 2 weeks a year, but nevertheless, I have to limit my personal use. The second thing I have to do is show income, but that's an insanely low number. I only literally have to show 2 weeks per year of income on it. That's it. Right? So if I want to leave it vacant, if I don't want tenants in my dream home and I don't need the cash flow, then for the first 2 years, all I have to do is limit my own personal use and find my buddy Eric to rent it to for 2 weeks a year, claim that on my taxes. And then after 2 years, I can do whatever I want. I can move into it as a primary or treat it as a pure second home or vacation home. And I don't have to pay any taxes. And I'm 100% safe in the IRS's eyes.
Nope, I can see why that makes your dreams really happy. So that's
Yes,
great.
it
So
does.
so just for my curiosity, so let's say that happens to Shannon finally wants to go to Maui and move to Maui. And let's say we sell our investment properties, we move to Maui, we keep it off, for the 2-year period, as you mentioned. And let's say that that we want to sell that 15 years down the road. Is it go back to the whatever the market is, 250, 500 at that point, or how does that work?
It gets a little complicated. So you can use the 1031 to buy the personal use property and then eventually convert it to personal use and then even eventually sell it using that section 121 primary residence exclusion to where you guys would have a maximum of $500,000 of gain to exclude. But there's two things. One is, so we have to first rent it out for the first 2 years, right? And then we have to live in it. But now if I'm going to sell it under section 121, I have to own it for a minimum of 5 years.
Okay.
So I can't just move into it for 2 years and sell it. So it's got to be a 5-year time period because I bought it with a 1031 and I want to sell it with 121. Just because of that combination, I have to own it for 5 years. You can still buy and sell your primary every 2 years. You don't have to wait the 5 years. But if you buy it with a 1031, I want to sell it as your home under 121 as a 5-year hold. And then you also don't necessarily get the full 250 or 5. You get what's called a prorated share. So let's say I rent it for 3 years and then I live in it for 3 years and I sell it. So I've owned it for 6 years. So I have to look back on all those years I've owned it after I sell it and define each one of those years into one of two categories, either a qualified or a non-qualified year. I'm trying to sell it as my primary and eliminate tax. So a qualified year, I lived in it. A non-qualified year, it was vacant or rented. So in my scenario, that's 50%. So I can exclude 50% of the gain that I have in that sale up to my 500,000. So if I had $600,000 of gain in that property, I could exclude 300,000 of it, and then I'd have to pay tax on the rest. If I had a full million in gain at that 50% ratio, then I would get to pull out my 500,000. So the longer somebody lives in that, the better that works for them. right?
Okay.
If they own it for 10 years and live in it for 8, they got to pull 80% of the gain out.
Right.
At no point will it be tax-free, but you can eliminate a lot of tax.
Love it. Okay. All right, Russell, I'll talk to Shannon. I'll see if we can make it to Maui. So appreciate it.
Excellent.
Thanks
I'll
so
help you pack.
All right. Thank you.